Welcome to BeginTrade, your ultimate trading guide. Today, we're tackling one of the toughest parts of trading, handling losses. It's something that every single trader has had to learn how to deal with. I know I have. You put your money on the line, make a plan, and sometimes it just doesn't work out the way you thought it would. Losses are inevitable, but how you respond to them can make or break your trading journey. Let's dive into it. The first thing you gotta understand is that losses are just part of the game. Every trader, from the newbies to the hedge fund hotshots, everyone takes losses. It's like when I first started flipping houses, I thought I could just buy any property, fix it up a bit and flip it for a profit. But guess what? I got burned, lost a bunch of money, and learned a valuable lesson. Trading is all about probabilities. You're not gonna win every trade, and that's okay. What separates the successful traders from the rest is how they handle those losses. So take a deep breath, accept that losses will happen, and let's figure out how to handle them like pros. Alright, so you've taken a loss. It happens. But don't just brush it under the rug and move on. Instead, treat it like a learning opportunity. Ask yourself some tough questions. Did you make a bad call? Was your strategy flawed? Did you get emotional and break your own rules? Were you trying to buy a stock that was clearly overvalued, or maybe you held on for too long hoping it would recover? Remember that time I bought a bunch of index funds thinking the market could only go up? Yeah, that didn't age well. Analyzing your losses is how you improve your trading strategy and avoid making the same mistakes twice. Risk management is your best friend when it comes to trading. Think of it like wearing a helmet when you're riding a motorcycle. It's there to protect you when things get messy. Before you even think about entering a trade, you need to know how much you're willing to lose. That's where stop-loss orders come in. They automatically sell your position when the price drops to a certain level, limiting your potential losses. Trust me, it's better to take a small hit than to watch your entire account balance disappear. Remember, we're playing the long game here, and protecting your capital is priority number one. Chapter 4. Avoid revenge trading. We've all been there. You take a loss and it feels like someone just punched you in the gut. Your emotions start running wild, and you just want to make that money back, right now. But here's the thing, revenge trading is a recipe for disaster. It's like trying to put out a fire with gasoline. It's only going to make things worse. When you're emotional, you're not thinking clearly, and you're more likely to make impulsive decisions. So if you find yourself feeling angry or frustrated after a loss, step away from the computer. Go for a walk, hit the gym, or just take a few deep breaths. Clear your head before you even think about making another trade. Chapter 5. Focus on the bigger picture. Trading is a marathon, not a sprint. You're not going to get rich overnight. Instead of obsessing over every single trade, focus on the bigger picture. Look at your overall performance over time. Are you consistently making profits? Are you sticking to your risk management plan? Are you learning from your mistakes? These are the things that matter in the long run. Remember, even the best traders have losing streaks. The key is to stay disciplined, stay consistent, and keep learning. Chapter 6. Take breaks when needed. Trading can be mentally draining, especially when you're dealing with losses. If you're feeling burnt out, stressed, or just plain exhausted, it's okay to take a break. Step away from the screen, clear your head, and come back when you're feeling refreshed. Sometimes, the best thing you can do for your trading is to take a step back. Go for a hike, spend time with loved ones, or just do something you enjoy. Taking care of your mental health is just as important as managing your risk. Chapter 7. Keep a trading journal. A trading journal is like a personal diary for your trading journey. It's where you track your wins, your losses, and everything in between. Every time you make a trade, write down what you did, why you did it, and how it turned out. Did you follow your plan? Did you make any emotional decisions? What could you have done differently? Over time, this journal will become an invaluable resource that you can use to identify patterns, refine your strategy, and avoid making the same mistakes twice. Outro: trade smart, grow together. Losing is part of the journey, but how you handle it determines your success. Accept, learn, and adapt. That's the trader's way. Remember, every loss is a lesson, and every mistake is an opportunity to improve. So, embrace the challenges, stay disciplined, and never stop learning. If you found this video helpful, give it a thumbs up, share it with your fellow traders, and subscribe to BeginTrade for more trading insights. Let's trade smart and grow together.